Hi, and welcome to the Stock Scores Market Minutes for July 18th, 2016. This week I want to talk about how to trade a slow summer market. The number of trading opportunities tends to fall in the summer. The retail investors aren't around as much. There's less volatility. Earnings season in quarter three tends to be the slowest of the year. So there's a lot of reasons why the summer is slow. The problem is that traders will often work harder to find trades because they are bored, because they can't find many good things to trade. And the result is that their standard tends to be lowered in terms of what is acceptable. Now, to overcome this, you have to be very purposeful and be selective, be patient, wait for those strong alpha stocks, those stocks trading on their own story, to come along. They do come along. There is fewer of them, but there's still a regular flow of alpha, and you just have to be patient and wait for it to happen. All right, let's get into this week's analysis. Here's the chart of the SPY. The trend over the last 2 weeks has been up ever since the Brexit bottom. So there's the Brexit vote there. There's the Brexit bottom on the Monday following. And we've been in a nice upward trend since then. We are now testing the upward trend line right there. We made a little bit of a close below the open on Friday, and that points to the possibility of a pullback in the near term. Certainly it is overdue. The market has moved quite significantly in the last 2 weeks, and that just tends to bring out some profit taking. So I do think that there is good chance in the short term that we see a pullback in the overall market. The long-term picture remains bullish because we have broken through to new highs. We did that this week, having broken the downward trend line the previous week, and that points to this market moving higher. Volume is quite light, and so that tells us that the buyers aren't particularly strong behind this. It's more of just a drift higher as opposed to one that shows a lot of excitement or optimism by investors. On the small cap side, we broke through the short-term resistance to come up to this one. Of course, we broke that downward trend line a couple of months ago and have been moving higher ever since. My expectation is that we stall here short term, but longer term, I do think that the market wants to head up to the old highs. On the Canadian side, we also have that nice upward trend since the Brexit vote. We are in sort of the bottom of the channel, maybe testing that upward trend line of the channel, but it remains a bullish short-term market coming into this resistance over here, which will probably stall the market next week. On the longer-term time frame, we have broken from a flag. Here's the upward trend, a flag, and a break to the upside from the flag, and that should lead to higher prices in the weeks ahead. But as I said, short-term, it wouldn't surprise me if the market pauses for a week or two at this high. What's critically important for the Canadian market is oil. We'll touch on that in a moment. The mining sector has been very strong, and that motivates the TSX Venture to continue its upward trend. I don't think it's a great time to initiate positions on many of these stocks that have made considerable gains over the last 4 to 6 months. But if you own them, for the most part, they remain good holds. You just want to, I would say, dance close to the exit door because we are coming into that seasonal time. Well, really, we're well into that seasonal time when the market action slows. On the Treasury bond side, we got a little bit overbought. We know that anytime the market runs away from its trend line. So for example, there, we ran away from the trend line and we work our way back to it. Up here, we have also run away from the trend line. We can either go sideways for a while until we hit the trend line, or we can move quickly lower and hit that trend line. Hard to say what will happen, but I do think the upside for the bond market is minimal in the near term. That means interest rates have probably bottomed out short term, and the market may start to price in the potential for the Fed to raise rates, given that we've had some pretty strong economic numbers, most notably the employment number that came out last week, and then some retail numbers have been showing some optimism from consumers as well, and that may motivate the Fed to finally make that second rate increase. Now that is, I would say, giving some optimism to the US dollar. You can see that the US dollar broke its downward trend a few weeks ago. We're building this nice ascending triangle rising bottom pattern. If we can break through this, oil US dollar likely goes higher, and that could be harmful to commodities, which could slow the Canadian market. So you want to keep a close eye on that US dollar chart, UUP. Of course, a strong US dollar is bad for gold, and you can see that gold has been in great shape over the last few months. It's at the top of its channel this week, broke a very steep upward trend there. Looks like it's going to pull back. I think we see a little bit more weakness short term on gold. Long term trend is still intact, but I wouldn't be a buyer of these stocks right here because I do think that there's going to be some profit taking near term. Now, the long-term chart of oil remains bearish. We did break the downward trend line a few months ago, but we're now rolling over again, and it looks like we may sort of go into a sideways range, where there's not a lot of price appreciation, maybe not a lot of price decline either, but I do see more downside risk here than upside potential near term. So I think you want to be somewhat cautious with oil. I don't think it's a situation where everyone's running for the exit door. It's just something you want to keep an eye on, and maybe don't be too optimistic about taking new positions in oil stocks unless they are, trading on alpha where, they have a discovery or something like that of oil. They're going to do well, but in general, their earnings are not going to be growing based on that oil chart. On the fear chart, and I've made this a very short-term chart. This is just a 15-day, 30-minute chart. And you can see that the volatility in the fear index got really low the last few days. And that's because the actual VIX index, that's the volatility index, is at its historic lows. And that means it probably won't go any lower. Now, the VIX itself, the VXX ETF, does decay in value over time because it is based on futures contracts. So it tends to decay, and that means lose its value by about 4% per month, unless there is some potential for future volatility. So if the VIX itself stays around its historic lows, this should go down by 4% a month. Now, if we get some fear coming into the market, of course, there's always political risks, the risk of a interest rate raise by the U.S. Federal Reserve. Those kinds of things can motivate a correction in the market. And if that happens, we can see this move up very quickly. But in the absence of one of those catalysts for a correction, this will kind of grind its way slowly lower while it basically waits for something to happen. So right now, fear is at a low. VIX could drift lower unless something starts to motivate it to go higher. So my ratings then, U.S. stocks bullish on both time frames, Canadian bullish on both time frames, gold bullish long term, bearish short term, is basically making a pullback in the near term. I will say with stocks, they're also looking like they will make a pullback in the short term, perhaps not a substantial one, but in right now it looks like they're starting to lose their buyer momentum. And then on the oil chart, I've got bearish on both time frames. It's not sharply bearish, but I do think it doesn't have great upside potential right now. U.S. stocks have finally broken out to new highs, which should lead to an advance in the weeks ahead. Short term, they are somewhat overbought, so a pullback would not be a surprise. Canadian stocks also strong, but still below resistance. Gold is in pullback mode, while oil is slowly drifting lower. Fear relatively low. That has been the Stock Scores Market Minutes for July 18th, 2016. Have a great week in the market and trade well.